Alison, last time we spoke was about 2 years ago, and you'd just been appointed CEO of GrainCorp, and you just announced a merger with AWB, which didn't go ahead. But at the time you cited the need to service global customers with a bigger balance sheet to survive globalization of the sector. Have the imperatives changed?
No, well look, thanks Stephen, and yes, I remember that interview very well, and it was an exciting moment to take over as CEO. And look, as it's turned out, I think that would have been a terrific combination if we had been able to go ahead with the merger with AWB. However, I'm really pleased with the progress we've made since in building our own business. So particularly developing our international marketing business, which was one of the strengths that AWB would have brought to us. It no doubt would have accelerated, but I have to say I think our team's done a terrific job in the 2 years since I've been CEO. So yeah, look, I think these opportunities, sometimes they work out and sometimes they don't. And look, with the benefit of the hindsight, I think we're actually in a pretty good place without it.
How do you develop a global presence without making major acquisitions?
Well, for us it's about being very, very targeted and very focused on building relationships with the end customers, the buyers of grain, who particularly want the qualities of the grain that we can source through our network. So we're never going to be a major international trader, and we've got no desire to do that. But what we can do is supply logical customers, Middle Eastern flour millers, Asian flour millers, for example, with high quality East Coast Australia grain, which is what they like for their particular kinds of breads. And I think we're very, very well placed there because of our network in country Australia, East Coast country Australia. We can source the grains that they want and give them a great deal of confidence that we can get it to them when they want it and exactly to their specs.
Who are your rivals in that sort of service?
Well, look, the international grain markets are very, very competitive, and there are many participants. Obviously, the big names which you'd be familiar with, like Glencore and Cargill, who operate out of Australia, and also who are important customers for us because they use our ports. But I think that our customers, the end user consumer of grain, sees that we do have a different proposition perhaps than some of the other players, and sometimes that proposition is what they want and they'll deal with us for that reason.
Do you think you're too small to play in that game? These are very big companies you're competing with.
There are many different strategies, I think, in international grain, and by being very, very focused, and we're very much about connecting growers and end consumers. So we focus on buying as much as we can directly from growers and selling as much as we can to end consumers. Our focus is not so much on trading grain, on buying from traders and selling to traders and trying to take advantage of international arbitrage opportunities. We really want to focus on those consumers of grain who want particular qualities and characteristics that we can use our network to source for them. And I think that that's a very viable, and as we've shown with our growth over the last couple of years, very successful strategy for us.
Alison, you've talked about GrainCorp seeking to increase its global sourcing of grains. Is that a diversification and risk mitigation strategy, or is it about growth?
Yeah, look, I wouldn't want to overemphasise what we're trying to do there. It's really about being able to add value to those core relationships that I described. So those relationships where we're really well placed out of Australia to serve. Of course, the East Coast of Australia is quite volatile in a production sense. Some years we'll have big years, like we've seen in the last couple of years. Other years we'll have poor years. And by having positions, small positions in other markets, we're able to selectively source where it makes sense to maintain the continuity of those relationships. But the focus is very much on those core relationships, and you'll see that we'll stay very focused on the core grains, which for us are wheat, barley and canola.
Alison, how do Australia's grain crop costs compare with other countries? How competitive is the wheat canola industry?
Well, look, we're ultimately, we can only participate if we are competitive, and it's the grower who ends up really bearing all the costs associated not only with production but also the supply chain costs involved in getting grain through to an end consumer. And I think that the Australian growers actually are pretty efficient. I think we did a good job in Australia of removing a lot of the subsidies and the government involvement, heavy government involvement we used to have in this sector. And that's driven the Australian producer to be one of the most efficient in the world. Where I do think there's opportunity for improvement is around the supply chain efficiency. And obviously we at GrainCorp have a strong vested interest in making sure that we do as much as we can to promote the supply chain to be able to support as much throughput as possible. However, we do also need support from governments, particularly to assist with making sure our rail infrastructure is sound, because carting grain on rail, long distance anyway, makes a lot of sense. And also to remain light touch in terms of regulation around our port assets. So the more flexibility we can have in the supply chain to make sure that grain can pass through at the lowest possible cost, the better off we'll all be. And the bigger the opportunity for the Australian grower to meet what is very strong demand in our region, that if we can respond to it, will provide a lot of growth for our industry over the decades to come.
Is it true though that the growers are getting a rough end of the stick because they're efficient, as you say, but our supply chain, whether it be ports or rail or it's just simply much higher cost than our rival countries, and we stay in the business because we've got very efficient growers, but as soon as it leaves the farm gate, the money's wasted by bad practices.
Look, I think there's definitely opportunities to improve supply chain costs, and as I said, we're very focused on playing our part in that and working with governments, and we had some terrific support from the Victorian government last year, where we co-invested with them to bring a line that runs up to Rainbow back up to standard, which will put about 150,000 tonnes of grain back on rail that was previously going on road. So more of those sorts of opportunities will definitely help, and less regulation around the ports, which allows us to work with our exporters to get the rail and road working together more efficiently than the current regulatory regime facilitates. So those things would definitely help.
Would our cost be twice that of overseas?
Look,
our supply chain cost be twice that overseas?
I think if you compared us with, say, Canada, where there are some pretty vast distances to be covered by rail, yes, you could look at it that way. But look, growers are pretty rational.
So our supply chain is about twice that, costs are about twice that of Canada.
Depending on the distance the rail that the grain is travelling, yes, that can be the case. But as I was saying, growers are very rational, and
that's a terrible indictment, though, to our. Isn't that the most awful thing that that here we have a efficient farmer and a supply chain that costs twice as much as Canada, in rough terms.
Look,
it's awful, isn't it?
Look, we definitely think there are opportunities to improve. I think it's not realistic to have that as a benchmark, because the geography of Australia is different from Canada in terms of the concentration of grain. It's easier to get larger trains carrying more grain because of the way the grain is grown and the concentration of grain in Canada than it will be here in Australia. But we can definitely do a lot better. And look, I mean, growers are pretty rational. They will do what makes most sense for them, and many of them will have alternate uses. And as an industry, we need to make sure that we make sure that grain is an attractive option for them, and definitely improving supply chain costs will help.
Alison, in relation to improving the efficiency of the ports, I think you've talked about using the ports for non-grain products and for imports as well as exports. Could you explain how that would work?
Yeah, in fact, we're already doing that to quite a large extent. So a couple of areas of focus for us are wood chips, where we've made quite a big investment down at Portland in Victoria, and we now export quite a large quantity of wood chips through our terminal down there. At Geelong, we import quite a lot of fertiliser as well, and there are other examples right across our East Coast Australia network. So that is useful income for us because, as I say, our ports can be very busy, like they are at the moment, or they can be very quiet, like they were a few years ago, with virtually no grain exports at all. So having a greater diversity of income and utilisation of those assets makes a lot of sense.
Are our ports productive?
Are our
ports productive, or are they a mess?
Look, our ports are pretty productive. We have very good relationships with our workforces, and a very sort of good, motivated group of employees who work hard when we need them to. Like right at the moment, where we're certainly pushing the supply chain to the max, and we're very pleased with how it's performing. We have a very different environment in our ports than you see in other port workforces.
Alison, you're about to face the first competition you've ever had in New South Wales. I think Glencore and West Australia's CBH Group are building a new terminal with some others. Is that going to impact you markedly?
Our focus is on doing a great job for our exporter customers with our ports. We've got 7 bulk ports across the east coast of Australia, and given the way the crop goes, you never quite know where it's going to be in any given year. So we can offer our exporter customers the benefit of a very strong network, and we think there's a lot of value in that. We understand that exporters will have their own reasons for possibly wanting to construct other capacity. We don't think it's necessary because we do have plenty of capacity, and the particular port you're referring to, I think, is being built at Newcastle and will provide, facilities for a number of commodities apart from grain. As I say, we'll just put our head down and make sure we can do the very best job we have to offer our exporter customers excellent service, and I think we'll get the results from that.
Alison, do you think you're a takeover target?
Look, I think that the best thing that we can do is run our business as well as we can, and I'm really pleased with the progress we've made. We've had some kinder conditions over the last couple of years, and I think that we're getting on and making the most of those. We're very intent on investing well while we've got some decent financial returns to really improve the strength of our grain handling network, to develop the grain marketing activities, particularly offshore, and to strengthen our malt business, which was an important acquisition for us 3 years ago. So we're going to get on and do those things as well as we can, and I certainly don't lose any sleep over being a takeover target or not.
Alison, we saw recently Glencore acquiring or announcing the acquisition of Canada's Viterra, which had earlier acquired ABB here. Does that change the competitive landscape much for you?
I don't think so. Glencore are a very important customer for us. They use our ports here on the East Coast a lot. They're a very active marketer of grain, obviously a very different kind of marketer than we ever would want to be. Very large, very capable, particularly in barley here in Australia. I think that they'll be a good owner of that South Australian business, and from our point of view, I think this is all part of the maturing of the market since deregulation, where we're seeing some consolidation occurring, which from a supply chain management point of view is actually not a bad thing, because from a planning point of view, we're dealing with some pretty large, mature, capable exporters for whom the planning task is well understood, and these are pretty well-run professional organisations.
Another sector that's been consolidating quite significantly has been that global brewing industry, and we saw SAB Miller take out Foster's here. How does that impact your malt business, which deals with those global brewers? Look,
globalisation of the brewers now, we've got, I think, the top 4 brewers accounting for over 50% of the world's beer production. It's been very significant over the last 10 years, and actually it plays, I guess, right into the model that we've created with our malt business. So we've got 18 malt houses around the world now, covering North America, the UK and Europe, as well as here in Australia. And we focused very much on turning what was really 5 distinct malt businesses that we owned into one integrated business that can really approach these global customers as one and offer them a lot of flexibility around where we supply from, and helping them manage their barley risk as well. So we think that globalisation for us is a positive because we have a great proposition for those global brewers.
Alison, the end customer of most of the grains are food processors, and their customers, of course, are supermarkets and food retailers. The sort of squeeze that is being put on the Australian food processing industry, is that being duplicated around the world, and does that affect you in the ultimate?
Well, we're certainly involved in food processing ourselves here in Australia through Allied Mills, which we own 60% of with Cargill. Allied Mills is Australia's leading flour miller. So we do understand those pressures, and we work closely with our customers, and we work with the retailers themselves to supply them with some of their ingredients, particularly for their in-store bakery. And look, I think that phenomenon is something that we see around the world. And, you know, look, I know it's a very, very tough transition. I've been involved in the food processing industry in a number of ways myself over the years. It is a tough transition that we're going through. But I do believe that the retailers understand that long-term their interests are served by having a capable supply chain, having capable processors here in Australia that will be important to their future, and I expect that they will act in line with that, though there's no doubt some painful readjustment for many participants in the sector to go through.
What you're saying is that if you're a food processor, you're going to have to reduce your cost to international levels, or close to it.
Yeah, look, I think if you're a food processor here in Australia, you need to make sure that your business is well run, that you're investing in your business, and also that you can generate the kind of innovation that will support some premiums and a long-term relationship with the retailers here in Australia. Because otherwise, I think import is an option. I don't think from a retailer point of view it's an ideal option though, because it leaves you open to the vagaries of the exchange rate and also just the risks of supply chain disruption and so forth. So all else being equal, I think strong Australian suppliers will definitely have an important role, and a role that will be valued by the retailers going forward.
The difficulty is that going right the way back, quite a few years ago, the food processors were among the most inefficient of our industries. They did very bad sweetheart deals with the unions and didn't invest in their plant partly because of those deals, and it really has been a mess. Do you think that can be cleaned up, or in the process of cleaning up they all just simply have to shut?
No, I definitely don't think that's the case, and I see many of our food processors, including our own Allied Mills, really responding to the pressure and in a very, very positive way, and also recognising importantly the need for innovation and the desire for the retailers to, and the in-store bakery and development of in-store bakeries is a great example of where there's been tremendous improvement in the offering that you can get now when you walk into a supermarket and experience their in-store bakery. And that's been very much driven by partnership of the retailer working with companies such as ourselves to develop new product that excites consumers. So I think that with that sort of mindset, there's definitely a strong future for food processing in Australia.
It must be very hard for your old workers at Allied Mills, because Allied Mills, not in your was among the most inefficient of those food processors in the old days.
You're showing your age, Robert, if you don't mind me saying. Those days are long past. And we'd be delighted to show you over the allied mills of today. I think you'd see a very different thing.
Alison, last one from me. There's been a lot of discussion. It's a great opportunity for the Australian agri sector in the economic development occurring in Asia and the increased demand for proteins and therefore grain. How well placed are you to participate?
I think we're very well placed. You're absolutely right. We're in the right place at the right time as a country. You know, we're going to see population growth increase by about a third over the next sort of 30 years or so. Grain consumption will increase by 50%. And importantly for Australia, traded grain will increase by 100%. So it's going to double. That's about 150 million tonnes extra. So that's very, very exciting for Australia because, of course, we do have quite a substantial trade surplus of grain, and everything that we can produce to respond to that need will satisfy and go to satisfy that demand. So there's a terrific opportunity for us. It's happening right in the markets like Africa, Middle East, Asia, and the Asian markets where we've got a geographic advantage. So we've got a supply chain advantage into those markets. So the imperative for us is to focus on the R&D that's going to allow us to improve yields, to respond to that demand signal, and also to really work hard to keep our supply chain costs as low as we can. And that's what will allow us to participate fully in a tremendous opportunity for Australian agriculture.
Alison, here we have a market, as you pointed out, that could actually double, or certainly increase substantially, and yet the developments in the Murray-Darling Basin are going to make it extremely difficult for us to participate in that.
Yeah, look, I think that there are a range of puts and takes for Australian agriculture, and I think if I think about it from a grains point of view, we're fortunate that the vast majority of what we produce is dryland production. So the irrigation is not the driving issue for us. There are plenty of opportunities around new variety development as well that will allow us to be a more reliable producer in the somewhat extreme dry and wet conditions that we can have. So from a grain point of view, I don't think that that's going to be an issue.
Okay. Finally, from my point of view, how does it look for the next 12 months? Both in terms of our production capacity and production and the world market?
Well, there's some interesting things as far as the Australian crop and particularly the East Coast crop goes. The crop forecasters have the crop somewhere in the range of 16 to 18 million tonnes for wheat, barley and canola production, and that's certainly an above average crop. So if that plays through, we'll be all very pleased. The crops are all now largely planted, and we've had some pretty decent rain across most part of the east coast of Australia. So we're feeling reasonably positive about the prospects for next year. Global prices, I won't even try to speculate. We're seeing quite a lot of nervousness coming out of anxiety around the US crop, corn and soy, and lack of rain there and what that might mean. Really it's a little bit too early to say. We need to wait until July, I think, and we have some better information on what that crop actually looks like.
But there's a chance we'll have a bad US crop at a time of a good Australian crop.
Well, yeah, other parts of the Northern Hemisphere, though, looking pretty favourable at the moment as well. So it's really the corn and soy and the impact that has, particularly on feed, because around about half of the world's grain is consumed by animals, and corn and soy obviously important parts of that.
Alison, thank you very much indeed for your time. We appreciate it as always.
Okay, thanks Robert. Thanks Steve.
Thank you, Alison.
Thank you.